So extreme fear in this space. What are you doing as on-chain asset manager for institutional credit? What are you doing with this sell-off? Would you recommend waiting out for the dust to settle, or do you brace for more downside from these levels?
It's a good question, Sherry. So, I mean, as an on-chain asset manager, we're very focused on risk management. Naturally, at this stage, we've seen a number of margin calls made. Fortunately, most institutional borrowers are making their margin calls, so there doesn't seem to be a sign of counterparty weakness in this space. But one of the things we're paying attention to is there does seem to be a confluence of factors driving prices lower. And we're seeing predictions that it could be as much as a 70% pullback from all-time highs. So that'd take it down towards the 38 to 40,000 mark. So I think a number of folks are bracing for prices to go lower.
Your thoughts on the main driver in this sell-off? What accelerated this downside for crypto space just this morning? Was it like Michael Saylor's strategy earnings call, or was it Treasury Secretary Scott Bessent's words around the Clarity Act? I know that there are multiple reasons, but what do you see happening in the markets right now?
Look, it's a great question, but I think it's a confluence of factors that we're seeing at the moment driving this price action. So we've seen a hawkish Fed. So people are not expecting further rate cuts at the moment. There's also tech sector weakness with AI sell-off. And this is coming from, expectations of, significant capex requirements and perhaps overbuilding relative to revenues. And then we've also seen forced liquidations. So traders who were leveraged long are now getting liquidated. And so that drives further price action to the downside. I don't know that Strategy's earnings impacted the market too much because that kind of gets priced in. And then on the other side, I think the Clarity Act and Secretary Bessent's remarks around it are actually probably a positive sign for the space.
So as you forecast more pain to come through in the crypto space, do you worry about the ecosystem getting damaged? I know that it's bleeding a lot, but I'm talking about events like a major exchange going underwater, or treasury companies like Strategy facing some troubles, or mining companies going under. Do you worry about that?
Look, I think it's always good to be cautious and definitely circumspect about those kind of factors. I think that the digital asset treasury companies, or the DATs, are going to face a little bit of trouble, given that their prime purpose was to be a vehicle for retail investors to get exposure to this underlying asset class. And a number of them are now sitting on unrealized losses. I think when it comes to miners, what we have seen is actually a number of miners have already taken steps to reorient themselves towards the AI space and invest in data center build out. So I think they're doing what they can to kind of diversify their position. But I think ultimately, what I'm seeing from inside the space as somebody who operates as an entrepreneur in the DeFi space is the fundamental traction is actually very good. We've seen continued interest from institutions to come into the space. There's a definite expectation that we would have regulatory clarity, no pun intended, through the Clarity Act this year. And we've already seen folks like JP Morgan indicate appetite towards Bitcoin-backed lending. So from the inside, I'm actually seeing that fundamentals are very strong, but I think definitely folks' confidence is getting dented by the price action today. And we've seen some prominent venture investors indicate that they may leave the space. We saw an announcement from Carl Samani to that effect yesterday. But underneath it all, I think the fundamentals are strong.
Yeah, so it's an interesting dynamic playing out, right? The so-called OGs are leaving or selling. Well, the new players, as you point out, institutions are coming in. But wouldn't this kind of chart, this kind of price action make them a little hesitant, although they might be excited about the opportunity to pick up these cryptocurrencies at much cheaper levels? Don't you think that some of the cautious ones will say, you know what, I've got other better ideas?
Yeah, I think that's a valid point. I think there are some cautious players in traditional finance or in tech who may look at either slowing down projects that they've started or deferring the decision to start them. But we've already seen significant investments be made by very large Web2 fintech players like Robinhood and like Stripe, among others. They've indicated that they will get into stable coins, that they think ultimately significant volumes of global payments are going to start moving on blockchain rails through stablecoins. So I wouldn't expect those types of players to pull back their interest. But I do think that people who might have considered launching a treasury company will definitely be probably delaying those projects or reconsidering those decisions.